CBOE Mini Options launched on March 18th, and what these contracts are, they represent 1/10 the size of a regular way contract, which brings the home gamer into the trade on stocks like Spider, GLD, Apple, Google, and Amazon. Let's talk some sentiment. Henry Schwartz of Trade Alert.
Sure. So we've been watching the minis since they were listed. We're on, I believe, the 12th trading day. They took off pretty solid. I mean, we actually had a 100,000 contract day. Open interest has just been, grinding higher. So there definitely was a need for these contracts. They've been trying to get them listed, really since Apple was a $700 stock because of the explanation that there's a lot of accounts that have fewer than 100 shares of Apple, and they can't collar or overwrite because, a one contract full size is 100 shares of Apple, and that was, a very expensive position to have. What we're seeing, nowadays is a solid 40,000 contracts a day of volume. Okay, so, it's equivalent to 3,000, 4,000 full-size contracts, which really is not much, but the commissions that the brokers are charging for these minis are the full-size commissions, which is interesting. I kind of thought you would see some brokers step in and say 50% off, because if it's a 1/10 the notional size, some people could argue the commission should be a little bit lower. To get things actually rolling, I know that some of the exchanges, they're listed on, I believe, 5 of the exchanges. Right. The other exchanges, I think, are just taking their time to see if they take off. I know BATS was waiving the SPY fees for minis entirely. And that actually did bring some, you'd expect to see lots of 2 lots and 3 lots in these products. We're actually seeing 900 lots and 1,000 lots of minis, which is odd because why would you trade a 1,000 lot of SPY?
When you could trade regular
way. 100, right. And
right.
The commission is 1/10. But, I'll tell you, this was kind of the same argument when SPY started taking the SPY underlying started taking market share away from the S&P futures. People be like, well, why are you going to trade 10,000 SPY actual ETFs right. when you could just trade a fraction of that in the futures? But people go where there's liquidity, people go where there's comfort. And if somebody's comfortable trading 1,000 lot of minis, maybe they're going to work out of them in much smaller pieces. You get some real action there. So
we're seeing the most volume on SPY and Apple. Are there any strategies that you're seeing in particular that's being employed?
We're looking closely to kind of try to figure out if the characteristics of the way these things are trading is a little bit different. Typically SPY is a big product for hedging, right? Because it's correlated to a broad S&P 500 portfolio. SPY and also SPX, you tend to see put buyers and call sellers, people hedging their portfolio, overriding. Whereas Apple is kind of more of a speculative product. Now, since these are designed to be more retail, we're looking very closely to try to figure out if there's actually kind of a sentiment difference. Right. A friend of mine said we should put out some sort of analysis of the pros versus the schmoes because people love to kind of look at retail paper and call it dumb paper. Mm-hmm. Obviously there's some very smart retail, and over the last 5-10 years, you've had kind of a lot of pros who have become retail. Because there's not much of a difference anymore. Mm-hmm. But what we've noticed in both Apple and SPY is basically a higher call to put ratio in the minis than in the big contracts. There's only a small data set to begin with. But it's very interesting, to basically, when Apple was around $700 and was in the headlines every single day, the sentiment at that level was kind of insane. I mean, we wrote up a few times when the put-call volatility difference actually tipped so that you could buy collar for a credit, meaning that the upside calls were so big because retail loved that stock so much that it made for a very, very cheap hedge.
Well, you would think that you'd see more volume in Google at this point because it's, a little bit higher than the levels that Apple was at, but it's a classic retail mistake that you make where you go all the way up to 730, and then now you're looking in the low 420s.
It's true, and it's interesting to see. We're watching to see who's really marketing these minis. Why Apple and SPY have really taken kind of that. That's really more than half of it is those 2 products, which is a little bit of an over-representation versus the full-size contracts. I think they're new. I know some brokers it's still kind of hard to find them. Some other brokers I've seen integrate it really well. If you pop up your Apple option montage, you got the full size, you got the weeklies, you got the minis, you got the mini weeklies. So I think that you give it a little bit more time, and people will start to see these things are very easy to trade. Right now the spreads we've been watching are comparable in width in terms of the bid offer.
Right.
So
that brings me to my next question. Are there any arbitrage opportunities in here for the pro?
We haven't seen anything. I mean, the reality is nowadays markets are so efficient. You have a few
right.
very, very high-powered, ultra high-speed market makers, and the inefficiencies don't don't pop up anymore. We were looking for those in the SPX PM versus the SPX regular contract as well, because those are slightly different. Things stay very, very tight in line. It's probably one of the very first things somebody decided to write in terms of an algorithm to look for any free money is, gee, if you ever see a cross market between a mini and a big, now they're not fungible products, so it may exist, but we haven't seen anything yet. So, but I think it's still new. I think it's got a lot of good traction to begin with, and we'll keep watching it. And like I said, the sentiment differences I think will be very interesting. If we start to see a lot of 470, 500 strike call buyers in the Apple Minis, but it's not really spilling into the full size contracts. Especially if you get away from the weeklies. The weeklies still tend to pull in premium sellers. So, the spot we're really doing some research in right now is trying to figure out, okay, that the sentiment value of coming to these, 3-week and longer contracts, and where there's pockets of interest and what that means.